Hello viewers, let's talk about supply and demand since these are significant market drivers in any market. Join us in this video as we focus on significant aspects enhancing success when employing supply and demand trading strategy in Forex trading. Supply and demand trading is a fundamental strategy in the world of financial markets, drawing parallels to the basic economic principles governing pricing dynamics. This concept is similar to that of horizontal support and resistance. Therefore, the strategy revolves around the interplay between supply and demand levels, which influence market movement and price action in any financial market. To understand the essence of supply and demand trading, it's essential to understand the underlying principles. In a nutshell, when demand for a financial asset exceeds its supply, prices tend to rise, reflecting the willingness of buyers to pay higher prices. On the other hand, when supply surpasses demand, prices decline as sellers outnumber buyers, leading to a downward pressure on prices. This fundamental relationship forms the cornerstone of supply and demand trading strategy. To help understand this clearly, let's consider the scenario of a tech giant like Samsung unveiling a limited edition of its flagship smartphone. Basically, anticipation and excitement surrounding the exclusive release generates a surge in demand for the product. As a result, prices of Samsung's stock or related financial instruments may experience an upward trajectory due to the heightened buying activity. Conversely, imagine Samsung introducing a new smartphone model with ample supply but receiving lackluster reviews from customers or from the consumers. In such a scenario, despite the abundance of available units, the market may witness a downturn in price as demand fails to meet expectations. Sellers may outnumber buyers, leading to downward pressure on prices as market participants seek to offload their holdings. It's crucial to dispel a common misconception regarding market movements. Many traders mistakenly attribute rapid price shifts to imbalance, or rather, to an imbalance between buyers and sellers. However, in reality, every buyer corresponds to a seller and vice versa. Therefore, rapid price movements signify not an imbalance in market participants, but rather the prevailing sentiment and collective actions of buyers and sellers in response to the unfolding market conditions. Identifying supply and demand zones forms the core of implementing this trading strategy effectively. Traders typically analyze price charts to identify consolidations preceding significant market moves. Demand zones, characterized by consolidation before upward surge, represent areas where buyers are willing to enter the market aggressively. Conversely, supply zones, observed in consolidations before downward movements, signify regions where sellers dominate and exert downward pressure on prices. A robust supply or demand zone exhibits several confluence factors that validate its significance. Zones appearing on higher time frames carry greater weightage, indicating broader market sentiment. Moreover, the duration of time spent outside the zone is crucial. Stability and consistency in price behavior outside the zone strengthens its validity. Additionally, a desirable setup involves a rounded retest into the zone, confirming its strength and establishing it as a viable trading opportunity. In practice, traders employ two primary methods to execute trades based on supply and demand zones. They often put a set and forget, or they often employ a set and forget approach which entails placing limit orders at zone boundaries and allowing market dynamics to trigger the trend automatically. Conversely, traders may opt for a more reactive approach, entering the market after observing the initial price reaction to the zone. Regardless of the chosen market method, risk management remains paramount, with traders setting stop-loss orders to mitigate potential losses and maximize profitability. We conclude by mentioning that supply and demand offers a comprehensive framework for understanding market dynamics and executing profitable trends. By identifying supply and demand zones and interpreting price action within these zones, traders can capitalize on market inefficiencies and anticipate future price movements with greater accuracy. We hope you have at least gotten something on employing the supply and demand trading strategy. Thank you for watching, and again, let's meet in our next training video.